Welcome to MoneyTree, your 5-minute financial transformation. Now listen, right now, everyone, and I mean everyone, is obsessed with AI. But what if I told you the real millionaire maker for 2026 is hiding in plain sight, in a sector that most people have completely written off? So, I've got to ask you, is everyone chasing the wrong stocks? Is it possible that while the entire crowd is looking one way, a massive, once-in-a-decade opportunity is building up somewhere else? It's a huge question, I know, but the data is starting to scream that we need to pay attention. Okay, let's dive right into it. There's this super simple idea in the markets. It's called sector rotation. Think of it like a pendulum. Money swings from the hot, popular stuff that's gotten way too expensive over to the forgotten, undervalued stuff. And you know what? History tells us that sectors that get beaten down for years, like energy has, are often the exact ones that come roaring back as tomorrow's biggest winners. And just look at this. It paints the picture perfectly. You've got big tech soaring, up 45%. And then you have the energy sector, down 15%. Now, for most people, that looks like a failure. But if you're thinking like a contrarian, that huge gap isn't weakness. Oh no. It's a flashing neon sign that something big could be about to happen. So, the big question is, how do we get ahead of the crowd on this? How do you actually spot these turnarounds before everyone else jumps on board? Well, we've broken it down into a really simple 3-step playbook. Okay, so the formula is super straightforward. Step 1, hunt the underperformers. Look for the stuff that's been beaten down and ignored. We've got that with energy, check. Step 2, find the safety net. This is crucial. You need a reason why it probably won't fall much further. And step 3, spot the future squeeze. This is the catalyst, the spark that's going to light the fire. All right, let's talk about that safety net. See this number? $63. That's the magic number. It's basically the break-even point for drilling a new oil well in the US. So when prices are hanging around this level, well, there's not much incentive to drill for less. It creates this natural floor under the price, which really helps limit your downside risk. Okay, now for the exciting part, the future squeeze. It's a classic setup, really. On one side, you've got supply getting tighter and tighter. OPEC is pumping near its limit, and there's just less investment in new drilling. But on the other side, demand is set to ramp up into 2026, especially with central banks expected to cut rates and get their economies humming again. So, less supply, more demand, you know what that means. It's the perfect recipe for a huge price spike. So the story makes a ton of sense, right? But what if I told you there's a secret market indicator, one with an absolutely uncanny track record of predicting these monster oil rallies, and it just went off? It's called the gold to oil ratio. And don't worry, it sounds way more complicated than it is. It's simple. You just see how many barrels of oil you can buy with 1 single ounce of gold. When that number gets really high, it's just the market's way of telling you that oil is ridiculously cheap compared to gold. And when things get that out of whack, they usually snap back. Hard. And check this out. This isn't just a theory. Look at the history here. Back in '86, the ratio crossed 30 and boom, oil rallied 300%. It happened again in 2016, a 120% rally. Then in 2020, it crossed 30 and we saw an unbelievable 540% rally. And guess what? Right now, that indicator is screaming go again. It is over 30. Okay, so let's put it all together. We have the contrarian setup, we have a supply and demand squeeze brewing, and we have a historical indicator with a killer track record, all pointing in the same direction. So what do we do about it? What's the action plan? Here's the most important part, so listen close. This is a patient investor's play. It's not about getting rich overnight. The smart move here is to build your position slowly. You could, for example, dollar cost average into a broad energy fund, something like the XLE ETF. The biggest mistake you can make is trying to be a hero and pick the absolute bottom. Remember, this is a 2026 story. It's all about patience. And that brings us to your challenge for the week. I want you to put on that contrarian hat. What is one beaten down, underperforming asset, doesn't have to be oil, could be anything, that you're going to research this week? Drop what you find in the comments below. Let's share some ideas. Hey, if this 5-minute transformation helped you see the market in a new light, do me a favor and hit that subscribe button for more from MoneyTree. And of course, like and share this so others can see it too. Full credit goes to the original source, and you can find that link right in the description. Thanks for watching, and we'll see you in the next one.